Chika, good morning to you. Thank you so much for joining us.
Good morning. Thank God it's Friday.
Indeed, at the end of another interesting week. So, Chika, what do you make of the regulatory environment for fintechs? And
okay, I don't want to start from there really.
Oh, okay.
I just want to take a step back and look at the evolution. Why fintechs?
Yes.
Now, one of the key initiatives of every country. Is what they call financial inclusion.
Yes.
Financial inclusion basically means that studies have found out that the more people that the economy have that have access to the financial system, even as simple as just having an account where they put the savings or the salaries, has some multiple effects on the GDP and quality of life of the country. And so the Central Bank of Nigeria and have been pushing for financial inclusion. Depending on what reports that you read, they tell you that between 30 to 40% of Nigerians are still financially excluded. And the Central Bank has, for example, pushed out so many initiatives, to enable people access banking services. But the traditional banks, as we know them, they are substantially profit driven. And a lot of their work is not driven by emotion, social responsibility. So they go to the money centers where they have all the critical social factors for a bank or their branches to business to flourish. And so they leave out the hard to reach and the rural areas, and there are a lot of people who are underserved too. And so that has been the major drive, or that gap. It has been the drive or the gap that the fintechs have come to fill. They underserved, and when people talk about fintechs, we don't know that there are several aspects of fintech.
We should let's put up that chart. So I think it's a big
aspects of fintech. The number one element in fintechs is actually payments. Which has to do with, because why do you get money? The essence of money and business is what? Receipt and payment.
Exactly.
So that's not surprising that about 80% of the fintechs is in that sector. The next segment is very important, which is lending. Lending. Because of the fact that, even on the private sector side for Nigeria, a lot of reports say that the ratio of the loans to private sector in Nigeria to the GDP is about 12% for our country. For South Africa, it's about 120%.
Wow.
For US, about 200 and something percent. So you can imagine the paucity, how shallow lending is. So what's more, the MSMEs, which is the other story that I talked about, and the individuals. So a lot of people, a lot of things that ordinarily in other geographies, you have to go to the banking system to get. You have to, over here, go through the eye of a needle to get it. I remember one time I was in Kenya, which is a country that has these fintechs that far developed in Africa, especially with the M-Pesa product. That's about several years ago, about 5, 6, 7 years ago, and I was doing some work for the bank there, and the MD of the bank told me that at that time, that him at his level, he can just on his phone there get about $10,000 loan without going to anywhere.
Wow.
Whereas to get $1 million from a traditional bank here, you're going to pass through the eye of a needle.
Right.
So you can see, therefore, as the payment is the first segment. Second segment is the lending. That's why lending at the MSME level and at the individual levels. So that's why it has flourished. And of course, the other segment of it, insurance is another aspect. The insurance penetration in Nigeria is less than 1%.
Very low.
And it's very low. So that's another, and the other segment, you can see them in the chart that's on our screen. So it is the gaps in the financial system have created a need for the fintechs to come in and grow the way they have grown. So if you look at Nigeria, for example, out of about the $4 billion that came in as funding for the fintechs in Africa, about 1.37 of it, almost about 40% came into Nigeria. So Nigeria has been, a core center for the development of fintechs in Africa. Indeed, I think out of the unicorns are companies that have a valuation of $1 billion or more. You know, startups. After this, fintech, the unicorns have in Africa. About 7 of them are in Nigeria. You have Jumia, you have InterSwitch, you have Andela, you have OPay, and Flutterwave. The Flutterwave is about, even at the last valuation was about $3 billion. You know, and so these are the issues that you find. So that the Nigerian fintech community is very far developed. It's ahead in Africa. You know, and there are a lot of opportunities there. And so when people ask me, you know, what is the issue? I don't think it's more of competition.
Okay, between the fintechs and the banks.
I believe it is more of complementing each other. Are you following what I'm saying? That's what I think. Complementing each other. And then, but you see that what's happening now is that if you look at the customer base of most banks, I'm trying to get something now. Customer base of most banks, you find that the percentage of the customers or the banks that have access to loan is very small. In some banks, maybe less than 10%. And it's not as if these customers don't need, funding. They need funding, but they cannot meet the terms and conditions of traditional banks. So even if though their business is in the traditional banks, what's happened now is that with the coming of these fintechs, a lot of them are gravitating, moving their business towards
that side.
And that's what you see. And how the banks responded.
By setting up their...
You see a lot of banks have moved to the whole coast. And some of them that you see, like some of them, 1 or 2 of them I'm close to, you find about 4 verticals. The first vertical is the commercial banking business as we know it. The next vertical is like the payment company. Similar
to what the fintechs
are doing. The next vertical is the consumer lending. Similar to what the fintechs are doing. And the last one is like insurance. Again, similar to the segment that fintechs are playing. And so, but the advantage the conventional banks have is this, that they have existing customer base. They have the history, track record of all these customers already.
Legacy.
So they have your account already. Whereas the fintech, you're trying to establish a new relationship. They're trying to know you. The banks already know you, know your salary account and everything. And so they can easily extend lending to you.
We're creating products
to suit your needs. So that's one advantage they have. That proximity of existing customers. The other advantage they have is the fact of legislation. Which is one of the questions he asked.
The regulatory
environment. And that's what one of the MDs has asked. The MD of Conventional Bank says that put us on the same pedestal with the same rules and regulations they are using to put us down, hold us down, that the banks are saying. Use that also to hold the fintechs. And then you will see what will happen. And it's becoming increasingly important. So you find who are the segments there. Of course, there's the Central Bank of Nigeria is a regulation because of BOFIA. Of course, NDIC, because a lot of them are having microfinance bank license at the background. I'll talk about that a little. They have SEC, because a lot of investments are coming in. Those are taken care of. Who else? Of course, I thought about Central Bank of Nigeria. I thought about that. The Money Laundering Act. Because of the money that's pouring in. And of course, the Money Lenders Act. Because some of them are going to be lending money. And so going through the CBN license may be very torturous for them. So they use the narrow Money Lending Act to do their business.
Fantastic.
They do their business. So are they welcome? Of course, they're welcome. They're welcome into the system. Do we need them? We need them, of course. Because even the CBN, with all the efforts I've made to achieve their financial inclusion targets of 80% in 2020, that has not been achieved.
Correct.
So you would require this to come in. Now, what are the other issues? The other issues that there are the regulation and the monitoring of the fintechs. We saw, even though I think Kuda saw that they have not responded to it, because we didn't publish the results, but we saw the report about the amount of loss they made. Now, what's happened is that some of them are still on the growth path. And some of them came up with the business models that may not be sustainable. When you say that no charges.
Right.
Banking services cost money.
Yeah.
You know, and so because of the fact, and I put this as a note of warning, because of the fact that most of them are in the front, they can be payment company. At the back, they have a microfinance banking license that will enable them to accept deposits.
Yeah.
And once you're accepting deposits, nobody cares really if you're lending money, just lending money with the capital of the owners of the business. But if you're accepting deposits from customers, on which basis, on which from the fulcrum for your lending programs, it means immediately that the Central Bank of Nigeria
has to step in
and most should regulate these people thoroughly, so that the kind of things that we had in the when finance companies and microfinance banks have been collapsing will not happen in the future, because there's always a temptation when you have a lot of money, idle money,
now go and start
deposits around to go and start doing things, you know, taking on other things. It's always very tempting, I can tell you that.
Fantastic stuff. Arise business analyst Chika Mbona. Chika, thanks for taking us through the fintech space. So we appreciate your insights.